What's up, what's up, what's up, everybody? Hope you guys are having a great day. Welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to make it in this morning as we're about to get rolling with our daily market commentary, identifying both breakouts and reversal trades from an educational perspective. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all that fun jazz. We are going to do our thing, and let's get rolling this morning. So let me go ahead and shrink my head. And we are a little bearish this morning. We're seeing the markets coming down as we had a pretty nice bearish move yesterday. Not overly unexpected with yesterday's bearish move. As we rallied back up into our supply level and got a pretty decent sell-off out of that move. Now, I will say I anticipated that thing to continue to sell off throughout the evening. We did actually come back up into the level again and then sold off hard in the overnight hours. So with that hitting there twice, that to me actually now becomes an area that I need to pay attention to going forward if we come back up and we gain some upside momentum, but we don't have it as of yet. Certainly, our 4-hour trend is giving me lower swing lows, lower swing highs. This would be an area where I would anticipate a pretty decent bounce based upon the daily level, right? I'm looking here at the daily level, and we can see that looking at the daily level, there is some reason to believe that we will see a bounce somewhere off of this daily zone. Now, it doesn't mean that it's going to happen, and so we continue on our smaller time frames to be bearish until proven otherwise, right? I need to stay bearish until proven otherwise. And so what I'm looking at for today, let me slide to the 15-minute chart. My eye goes to this area right here on the 15-minute time period, okay? And so on that 15-minute time period, what I'm looking at is that 38.78 by 38.82 for a potential reversal, price coming back into this region. Now, this is your stop would have to go above the pivot, but I think that's a decent area to try to re-engage this next move down. Don't know that we're going to make it that high. We actually look on the 15-minute like we're rolling over a bit right now. And so if you're more aggressive, you could theoretically take a short right now with your stop just above 38.60 if you really want to be a bit more aggressive. So that's also a possibility. Let's see. So that's the S&P. That's kind of what I'm looking at for today. If I look at the demand area, you know, we're sitting right above a decent demand area on the 1-hour time frame, but we know that demand area at this point has to be a confirmation because our trend is down overall, right? Following our rules, that has to convert over to a confirmation area that we would have to utilize. All right. Next level would be in the NASDAQ. So in our NASDAQ position yesterday, we talked about a potential breakdown trade in the NASDAQ. So those of you that were looking at our trade updates yesterday, we talked about letting this NASDAQ be a runner, moving your stop to break even and letting the NASDAQ be a runner. So let me know if you in the chat session down below if you guys are still in this position, because this one has become a pretty good runner and is continuing to move a little bit off of that area. So where is the stopping point, if you will? Well, let's go to the daily chart. Whereas the S&P has a pretty clear demand area on the daily chart, the NASDAQ's demand area is not quite as clean, right? Now, I'm still treating this as an opportunity to get long on a pullback. I just don't have a good reversal candle yet in order to do that. Your next quality demand area, in my mind, doesn't come into play until down around in here, which is that 12.5 area, just below 12.5. All right, Mr. VCast. Vince, I'm glad you were able to close that one out for a nice profit. That's good. Letting yourselves, like I said, you can continue to let that one run if if you're so inclined on that position. So now, this was a confirmation long, and that confirmation long certainly did not get us an entry. So now we would look for, where's our reversal coming back up on this position? Well, coming back up on the position, the most obvious level is up here, right, at the origin of this strong drop. However, we're going to look inside of this drop on a 15-minute, which is our zoom lens entry, if you will, and look and see if there's a better entry. And when I do that, I see that this area here is probably better. Now, why this area? Well, first of all, a couple reasons. First of all, number one is that we have a little drop-based drop right here below a pivot. Number two, it's a prior area of support. By being a prior area of support, acting as a new level of resistance, there's a good chance that that will become a decent turning point. Now, the only downside is I don't know that we're going to make it back up to that level. And we may not make it back up to that region. If we do, then that becomes a pretty good trade and a pretty good opportunity if price makes it back up into that region. So that's our NASDAQ level. Now, the Russell trade, so looking at our Russell level from yesterday, we have a demand area down here that is a confirmation demand area, right? However, we're chopping around in front of said confirmation demand area. So since we're chopping in front of that, I feel like there's a little bit of weakness in here. There's some buying pressure coming into that zone, but the buying pressure coming into that zone may not be enough for me to necessarily lean on in that Russell position. So I think what I'm going to do is remove this level right now. Just going to remove this one because we're basing in front of the level, which is the kiss of death. 4-hour trend actually on this one is not as bad as the other markets. So I'm actually just going to hold off on the Russell. I think that you've got better opportunities in other markets, and I think it's going to make a much better opportunity. Chat on IB is that NQ is most prone to Powell's speech fallout. Yeah, well, that could certainly do it, and it is dropping pretty hard. It's definitely our weakest one. Now, the YM yesterday figures, we put in all these updates of the trades that made sense and that worked out pretty well yesterday. The YM, it did not. Look at the strength of the Dow yesterday as it blew right through what I thought was a clean supply area. So this continues to chop sideways on the 4-hour, while the S&P and the NASDAQ continue to come down. The dad has not started to follow mom quite as of yet. He's kind of holding out. And so because of that, I'm just not going to take any really strong, hard look at the Dow or the Russell, although a breakout in the Dow is still a possibility. The NQ breakout was really the trade of the day yesterday, although the ES reversal was right behind it. So both of them turned into pretty decent trades yesterday. So let me highlight these real quick and share this grid. So this grid will be posted on the website. All right, next, bonds and currencies, commodities, energies and metals. So looking first at energies and metals, we have crude oil. So looking at crude, we've got this confirmation short yesterday, which blew right through. Now, why do we make that a confirmation short? Well, the reason we made that a confirmation short is when I look at this, we have swing high, swing low, swing high, swing low. We didn't really have a downtrend, but it looked like we might break out down here below 58.73. Market never did that. And so I said, well, we are showing some weakness, so let's look at a supply level up here. This is an example, and I want to talk about this for a minute because I think this is something worth noting. My outlook Sunday night. So when I looked at this market on Sunday night, which was right about here, my outlook was I was slightly more bearish, right? I was slightly more bearish, meaning I felt like we had been overextended in crude and that the prices may come down. So I had two trades identified and set up. Trade number one was a breakdown below 58.73, provided that we got the basic. Trade number two was a reversal at this area here, utilizing a confirmation entry. Now, was I completely wrong? I want to start there. Was I completely wrong on my analysis? Yes, I was as wrong can be on my analysis. Did it cost me a nickel? Nope. Nope. See, what's great about the market is if you just because you have an analysis that you determine, okay, if this then that. If this happens, then I do that. What it allows you to do is to be completely 100% butt naked last wrong in your decision. And it's still okay because you don't enter the trade unless it follows through on the trade plan. And that was what happened here with this crude oil trade. I'm okay missing out on the move up. What I'm not okay doing is crystal ball slightly frozen. Yeah, the crystal ball doesn't exist, right? In all reality, the crystal ball doesn't exist. All that exists is analysis and probabilities. And so I set the trade there was a trade that was in the structure of if this, then that. And I think that's the best way to identify these levels. Now, same thing occurs up here. We don't have a confirmation short entry, so blew right through. So really what happened is all this move up, even though I was wrong on my analysis, gave me no real entry. So I'm okay with that. And I still said that I'm still a longer-term bull on crude oil. Matter of fact, I wouldn't be shocked to see crude oil make it all the way back up to 70 for a longer-term play. I'm not sure we're pulling back a little bit now. If we make it back to 60.49 by 60.17, we got a nice wick over wick for a potential reversal. You also have a level here at 61.19, although I don't like it quite as much as the slightly lower level. Next is gold. So looking at gold, yesterday when we were in the session, we were live in the session, and I said, if you want to get long gold, right now is a good time to do so. So you can leave in the chat window if you took advantage of that, those of you that were able to jump in. And we said that if you get long gold, right now is a good time to get in. And your stop is at 71.91.6, just below this low, and your target's at 18.10. And the market came up, poked our target, and gave us an opportunity to close out of that trade for a nice little profit. So hopefully some of you were able to catch that. Now, if you missed it, you say, well, Chuck, I still want to be able to get in on a pullback. Well, the downside is that we don't have any great demand levels on a pullback, which is why that was a breakout opportunity. Now, we did come into this area here of supply, which is a confirmation short. Now, why is it a confirmation short? It's a confirmation short because the level's already been hit once. We had this area here where we touched it, moved away. Nice, Ryan. Glad you took a little bit of coin off the table. That's nice. Confirmation short off of this level. We didn't, in my mind, trade deep enough to get the confirmation. How do I know that? Doesn't have to be my mind. I can just turn. See, one of the reasons I like to use the Fibonacci lines is because I can turn the 50% line on at any time. And we did not make it to the 50% area in order to trigger an entry. So what does that mean? Well, that means now that level is DTM, dead to me. That level is dead to me. However, a breakout level now exists, right? Because I've got two touches of that zone, and basing in front of the level would lead for price to move a bit higher. Next, looking at Nat Gas. So Nat Gas yesterday, for those of you that took the gap and go, you were nicely rewarded. If you missed the gap and go, you did have an opportunity on the retest area. So price came back up into our level that we talked about yesterday, and then 6 candles later, it did butt kiss. It did absolutely nothing. And so my guess is you closed it out at break even when you got stopped out in the overnight, or you took some money off the table. Either way, it just stalled out on us. Now, wound up that it continued to move down in the overnights, but if you followed the rules, you probably got out of this one at break even. Which is okay, right? I'm all right with that. And so let's see if we break below here. Now, I don't know that I'd call this a breakout trade, a true breakout. If we get basing here, then it's going to be a true breakout. But if we just break down from here, it's not a true breakout. But look for a retest back up to this area for a short. Copper, nothing real new to cover there. I'm going to share this grid. All right. Next. Ags. So we did break out of this big triangle pattern that we had here in soy yesterday, as we had this kind of pinching 4-hour wedge. Now, it doesn't mean that we take the trade on the breakout of the pattern. I usually want to take the trade on just a true breakout setup, right? When we get the true breakout setup, and I didn't really get that picture. So we've pulled back a little bit. You have a little wick over wick right in here, but it's a horrible time of the day. And so your next level would be this one down in here, which is a better time of day. This wick over wick, 9 o'clock, 9 p.m., not exactly the best time of day that I'd want to get long on that position. Next, corn. So corn gave us a breakout right here, last night. Didn't really give us great basing. You could call it basing, but it's weak basing. But if you took it, you are technically still in it because you haven't gotten a stop below the last pivot, which was way the heck down here, right? Even if you took the breakout on the 15-minute, your last pivot would be down here. Oh, I guess theoretically it could be this area in here, but if you took the 15-minute on the breakout, then you're 6 candled out. My point being is that the trade still is valid, but it's not really going anywhere. I think there's still a chance that this breakout happens and we continue the move higher. And the reason I'm thinking about that is because of the clean air that I have over here to the left. Okay? Clean air that we see over there to the left. Now, keep an eye on price getting back up above this 555 for a potential move higher. Theoretically, there's a retest into this region, but I don't like it. It's not all that clean. Wheat doesn't really have anything that's kind of sticking out to me. And bean oil, as it's continued its march higher, I feel like I'm just putting another demand area that's not going to get retested. Technically, you could try a breakout above here if you just want to take the breakout above that region, especially since we're getting a bit of basing. That breakout on a 15-minute, you got, It's not ideal. It's not ideal as far as a breakout goes. As a matter of fact, and our momentum is even shifting a bit on that 15-minute chart. So technically, you could, you can certainly take it. It doesn't follow the rules, and so that scares me off a bit. More than a bit. It actually scares me off completely. All right, next, bonds and currencies. So looking at bonds and currencies, numero uno, we put in a little bit of basing down here, but sometimes, when I look at this, I see a bit of a triangle pattern that's forming. Right? I see a bit of a triangle pattern forming, and then there's some selling pressure at some of these upper levels, which tells me the better probability is that price continues to trade down. Now, in this case, since our downtrend is so strong, I'm actually okay taking the breakout of the pattern. If you want to take the breakout of the pattern and get low below the breakout of this triangle, I'm okay with a short below there because of the strength of the overall downward trend. ZB looks very similar. It's more of a straight line breakout with a breakdown below 162.02. Now, We did yesterday talk about the euro position as we had the euro level up above us. So price came into our 1 hour euro level, and we got into there yesterday morning, right as we were in the room, and it just came up, came down. Technically, you got a little move away, but not enough for a 3-to-1. Probably not even a 2-to-1 really out of here when I go to the 15-minute and look at our tightest stop. And then it kind of hovered around and blew right through. So truth be told, it's a good opportunity for you to just take a good old-fashioned punch to the face stop out, where you get in, you think it's going to work, it starts to go back up, you think it's going to work, and then it comes right back up, and you're like, oh no, I feel like, oh, and then I get stopped out. That's really the setup that it gave us, and that's the emotion of kind of going through there, right, on that euro. So when I look at the euro for today, where's my best trade, my best levels? Well, on a 4-hour chart, we are definitely putting in kind of that bottoming basing pattern in there. On the daily chart, we can see that we've put in a higher swing low and a slightly higher swing high. So while we do have this little 15-minute, we'll call it a hidden pivot up above us, I think that bullishness is really the better play right now. We just don't really have a structure in order to get in and rejoin at the moment. I would like to see some basing up around 1.218 to give me an opportunity for a long entry. But other than that, I don't have a really great reason to get long. If you get a good candlestick reversal pattern somewhere down in here, you could theoretically go on a candle-to-candle opportunity. And then the Canadian dollar, we didn't have much to say about it yesterday, and we don't have much more to say about it today. Could do a breakout above this region here, provided that we get the necessary basing. And then, of course, the on-demand button's always in the wrong place for me. All right, so let me share this grid. Hey, do me a favor. If you guys are still here watching, those of you that are still here, if you've not already done so, please hit the thumbs up icon. Means a lot, they tell me, and so I ask for it. And then starting next week, remember, starting next week, we are no longer going to do the YouTube live every day at 7 o'clock. Starting next week, we're going to go to a pre-recorded DMC, and I'm going to do it. It's actually not even really going to be the DMC because I'm getting rid of the daily part. We're going to start at 3 days a week. I may wind up going back up to 5 days a week, but we're going to do 3 days a week. Monday, Wednesday, and Friday, it's going to be the big picture and the stocks that are in the news. We're going to look at 2 equities and 2 commodity markets, and then looking at stocks that are in the news. So that'll happen. So, all right, let's go to bonds and currencies. So looking at the New Zealand dollar, we talked yesterday about New Zealand dollar coming back into this region. It certainly did not come back in, give us an opportunity. And so we could still get a breakout trade above the high. But if nothing else, there's really not a whole lot of levels to add from yesterday. There's not a lot of clean demand in here to lean on. Great British Pound. Great British Pound did give us a bit of a breakout. We got some basing here and a breakout. And so our trade update, for those of you that were in our position yesterday, let me just pull it up here. This is what our trade updates look like, by the way. So here was our trade update. Has broken out and has not moved. We are at 5 candles, but at this point, move stop to break even. Now, that was at 2:50 Central in the afternoon, so 10 minutes before market close. So if you're still in the trade, your stop is at break even. There's nothing wrong with just leaving your stop at break even if you're still in the position. It's not going anywhere, though, at this point, but it certainly still could go somewhere. So if you want to take a little bit of money off the table, you got a few ticks worth of profit, you can take it. In reality, this kind of thing is just good to leave your stop at break even, and you still have the opportunity that price can really get a strong run out of there. And you've essentially got, I don't want to call it a risk-free trade because technically we could gap below the level or you could have slippage, but it's a very, very, very minimal risk position up until Friday when these markets close for their weekend break. So let it run. Let it run. Looking at the Japanese yen. Now, the Japanese yen yesterday came into our supply level, and this is always frustrating, right? Does this frustrate anybody else other than me? I'm just wondering if this frustrates anybody else other than me. Now, our trade update yesterday, what we talked about in the yen was to 15-minute supply level's been stuck in the level, still not moving. At this point, it's been 6 candles, move stop to break even. And that was this area right in here. And I said 15 in the update, but it was a 60, it looks like. But either way, we were at 1, 2, 3, 4, 5, 6 candles, and it had not moved. So that was at 250. So we said, okay, move your stop to break even, which was right about here. And then immediately it stops you out at a break even. And then it goes up and you say, okay, whew, I'm glad I got out of that trade. There's no way this thing's going to work. It's going to start taking off. Son of a... Frustrating. I know. And this is the kind of trade that makes you say, well, you know what? I'm going to change my rules, and I'm not going to use the 6-candle rule anymore. That's a terrible idea. Okay? That's a terrible idea. Just because you missed out on something doesn't mean you change your rules going forward. This is one of the few times that the 6-candle rule has come back to bite you. Now, by the way, didn't really bite you because you probably are going to get stopped out on this move up anyway. But sometimes this is just going to happen where we get the 6-candle rule, gets us out at break even, and then price moves the way we thought it was going to go anyway. And to that, I say, that's life, right? A famous Frank Sinatra song. That's life. And I'm okay with that. I'm okay with missing out on that position. I'm going to be much better off following that 6-candle rule in the long term than I am to allow it to keep me out of a trade. So we do have a little drop-based drop here. It's been retested once, so I'm going to make it a confirmation due to the wick over wick just below it. All right, and then last is the Aussie. So looking here at our Aussie dollar, yesterday when we looked at it, we were sitting right about here. Today we're sitting right about here. So in the grand scheme of things, it's gone nowhere. It went up and came back down, and so nothing has really changed about our demand level that's still down here because there's still nothing quality directly down below us. So not a whole lot to talk about in currencies. Remember we talked yesterday, though, about the fact that if you see these currencies, the dollar showing continual weakness, then you're going to see some strength in these currencies, and they might make good swing or position trade ideas or candidates. So that's all I have for today, everybody. Once again, I appreciate you joining in and sharing your thoughts with me in the chat window. You guys are amazing. If you haven't done so, throw a like in there. Share this out with others. We're gonna keep going, keep rolling. March the 4th, by the way, March the 4th is our Traders Summit. So if you have not seen yet about the Traders Summit, go to tradersarmy.com/Traders Summit. It's going to be a good day. And I will. You'll see a video coming out on that here real soon to help you get